Hey everybody, this is Richard. So in this video I'm going to be going over the last few weeks of trades that the algorithms have placed, that the Geronimo Trading System has placed. Now before I get started on that though, I just want to show you this weekly chart just to kind of show you what the S&P has been doing. So again, this is a weekly chart. Now the last review I did was basically at the end of the week of the 22nd of April. So it would have been when the S&P was at about 4,267, 4267. So since then, we've had about 5 weeks, and 4 of those weeks were down initially, and then we had a big rally on this week, and then the final week was down as well. So overall, the market has been selling off since I've done the last review. So how have the algorithms done? Well, the Geronimo Trading System actually did really well. We didn't have a single put spread trade, which is actually really good. And I'll talk about that more when I show the put spreads. But we did have 4 day trades. One of them was a loser. It was a stop out of about $350, but then we had 3 winners. Now the 3 winners, all 3 of them were actually really big. 2 of them were just massive. We had a really good long trade, a really good short trade, and then the most recent short trade we had was also good, but not as good as the first one. But overall, in the last 5 weeks, we've had a combined return of about $5,600 per unit traded, which is about 37%. So like I said, the algorithms have done incredibly well, even though the market has been selling off. Now let's look at each algorithm independently. So the first thing I'd like to do is look at the put spread algorithm. That's what this is showing here. So all this shows is this is the S&P as it was going higher last year. So to orient you, I mean, back here you have April of last year, over here's September of last year, and then this would be December. And then the market has been selling off since then. So really since December, since the start of the year, the market has been trading lower. Now there's been some pops. In fact, we had a pop kind of basically in March where the market did go higher, but then it just rolled over again. But this is important because a lot of my customers have not been with us. They weren't with us last year. And so you're not used to seeing any put spread trades. And I'm showing you this so that you know that normally the algorithm will do a lot of put spread trades. As you see the text on the chart here, that shows where the spread trade would have been. This year, we just haven't had that many. But the reason why is because the market has been trading lower. So, and that's a good thing. Again, the put spread algorithm is the algorithm, it's one of the 3 and it's designed to do well when the market is going higher. And so the fact that we're not having trades as the market has been selling off has been really good actually, because it's preventing us from having the losers that we might have seen if we were in them. But eventually the market will stabilize. In fact, it already is starting to stabilize now, and any day now we could actually have some put spread trades. But we will get them soon, and eventually we will, is probably a better way I should put it. And when we do, you'll see them occur towards the market close. But what I want to highlight is that the algorithms have done really well because we haven't gotten into any trades. Now, again, the market will stabilize and we will start jumping back in, and then hopefully we have some winners that will add to the gains that we've seen recently. Now again, the algorithm trades 3 individual algorithms: the put spread algorithm, day trade long, and day trade short. So let's look at the day trade short now. Now the day trade short, we did have one trade way back here, but I already covered this in the previous video. This was one from the 21st of April, and it was a stop out. But notice since then, the market really had just been selling off. So, again, these are 9-minute candles that you're looking at here, and these dotted lines, hopefully you can see them okay, represent a day. But notice how for the first 5 days after that, there really were no good opportunities. This day right here on the 28th of April, we could have triggered. In fact, I think we came close to it, but it's good we didn't because we would have been stopped out. Because notice we would have bought in here, the market would have sold off and hit our $350 stop before it would have rallied. So it's good it didn't trigger here. It's definitely good it didn't trigger on these days. This day, maybe, but it wouldn't have been a huge gain. This day, even if it triggered, we would have got stopped out. So again, it's been doing the right thing by not trading, because again, this is a long algorithm. Now, if you keep looking here though, the very first day where we could have had a profitable trade was this day here, and look what happened. We actually did. So I do want to highlight that the algorithm did a great thing. I know for everyone that was trading throughout this period, it felt like we would never have a trade. But finally we did have a trade, and it was a really good one. We bought when the market opened, and I actually did a video on this, and you can see the video if you go to the YouTube page. But we bought towards the open, just after the market opened, and exited with a gain. I believe the gain was about a couple $1,000s. I think it was about a $2,300 gain. So that was the first trade we had on the day trade long. After that, you'll notice again, all these other days, they wouldn't have been good if we would have bought. We would have got stopped out here. Even though the market closed higher, we would have bought here and gotten stopped out. It definitely did the right thing on these days. So it didn't really miss a lot of trades. Here it did buy again on the 23rd of May, and we had a stop out. So this is an example of we bought and we got stopped out when it hit our $350 stop. This was a tough trade because it did end up closing higher. That's never fun. But in the end, it did the right thing. This is a day where it missed a trade here. If we would have bought here, it would have been a nice trade. But again, this is just how it works. I mean, we're not going to win every trade or every day or capture every possible trade either. But here's another trade that we had. This is on the 27th. I just did a video on this one because I was recording the screen on this one as well. And it was a nice gain of around just about $1,200 that we had on this one. So those were the trades we had. We had 3 winners, and I'm sorry, we had 2 day trade long winners. This one and the other one that was even bigger, this one right here, and then we had 1 loser. So let's go ahead and look at the day trade short now. Okay, so here's a chart of the day trade short. Now, I will be the first to admit that it would have been nice if this short algorithm would have captured a few other trades, like possibly on this day, although it was a gap higher, so it's looking at different things. But I think the following day, this one here, it came really close to triggering, but it didn't. So this could have been one where we could have had a nice trade, but we didn't. So that's okay. This algorithm is one that can be very frustrating because it's a short algorithm. And the tricky thing though is that it's always very difficult to go short the market. It doesn't mean that we don't. It just means for my algorithms, the conditions have to be almost perfect for it to take a chance on it. The reason why is our stop is a little bit bigger. It's about a $500 stop. So we want to be more careful because as the market is going lower, there's going to be more volatility. And so your stops, it's just really easy to get whipped out of trades. But in this case, we did have a really good trade, and let's kind of zoom in and take a look at it. So basically the market gapped down in the morning. See if I can find it again. There we go. So we had the market gap down, the equity markets gapped lower, and you can see that right in here where the market gapped substantially lower. I believe it was about a 40-point gap because the market had closed at 40.85 and then it opened at 40.38. So yeah, about a 45-point gap lower. Pretty big gap. The first 20 minutes or the first 18 minutes, the market stayed lower and we ended up going short. And notice right here when we went short, I know a lot of you thought, oh boy, here we go. We went short probably at the low of the day because it always feels pretty scary when the market is down a lot and then you go short. Always feels scary. But in this case, it worked out really well. We went short and really, you know, the market, we barely ever were down on that trade. Just the first couple minutes, there was a point where it looked like it might rally, but it didn't. It just sold off. And throughout the entire day, the one thing for sure is, yeah, it would have been nice if we were in it the entire day. But in this case, it hit our $2,500 target, and so we ended up getting out. So this was a great trade for us, really solid trade, and it just added to the gains that we saw. So the reality is that these algorithms, the way that they handle is they will take these opportunistic short trades when they occur. They'll also take the day trade longs as they occur. And I want to remind you too that even though the market is going lower, we still will have day trade long opportunities. In fact, if you look at the previous 4 weeks, then you'll see that the market was going lower, but we still had some successful long trades. Another way to look at it is think of it this way. We have 3 algorithms running. 2 of them are long, 1 of them is short. We had a total of 4 trades. But consider this, we still were profitable even though the market was down by a large amount, even though we only had 1 short trade. So obviously, maybe it's not obvious, but it should be reasonable for me to say that even though the market is going lower, even if you have long algorithms, you can still do well if you're using them the right way. In other words, for the trending algorithm, the put spread one, where we're looking for a market that's trending higher, we definitely don't want to be in any of those trades because it's going to hold overnight and more than likely it'll get stopped out. For the day trade short, obviously in a down moving market, it'll have these opportunities and we should have winners like we saw here. But the one that usually throws people off is the day trade long. And let me show you more what I mean by that. Again, here's a weekly chart of the S&P. And remember that first day trade long that we had was on the week of the 13th, I believe, which was this week in here. And we actually had a winning long trade, even though this week was down. We were actually up this week. And that was because we had a long day trade that took advantage of kind of a short covering rally that occurred on one of the days in these 5. So hopefully that makes sense. Well, I guess another way to put it is, think of it as every day the market is either going to go up or down. And over the course of a month, if the market is lower and you're in a bear market, just like we've seen, throughout the last, 7 weeks or whatever this was, even though you have a long algorithm, even though the market's going lower, you're still going to have a lot of days within this 7-week down move where the market pops. And when that happens, those moves tend to be really strong. And so you can have, as part of a bear market strategy, a algorithm that might be considered like a short covering day trade algorithm. And that's really what our day trade algorithm is. I just don't call it that because it also trades when you're not in a bear market, when there's just a lot of strength. But it tends to really do good when the market is going lower. But what we're doing is we're just capturing the trade for one day. But that's why it doesn't hold overnight. Because if we hold overnight, in fact, I've written the code to do that. And when you do that, it just doesn't work as well. So what that's telling you is that these really are just day trades that it's capturing. So hopefully that makes sense. If you have more questions on any of this, though, feel free to reach out, shoot me an email, let me know. But overall, it's been a really good 6 weeks or so since the last video I did. I do apologize for the delay on the video. Part of it was just because we didn't have any trades for a couple of these weeks, and so I just kept delaying it. But I should have done one a few weeks ago. So I'm going to try to get back in the swing of doing them every week. Thank you so much, though, for being a customer, for trading with me, for using the Geronimo Trading System. And I really appreciate it, and looking forward to hopefully a really strong finish to the second quarter. So thanks again for watching, and have a great day. Bye-bye.